and welcome to our special offering Budget Stocks on Business Today television. Starting today, we'll be focusing on a host of sectors and stocks which stand to gain from the upcoming budget as hopes are building on from Modi 3.0 to step the pedal on growth and spending and higher allocation for various industries. Hello and welcome. You're watching Business Today. I'm Sakshi Batra, and on this very first edition, we will be focusing on the FMCG sector. Interestingly, on a day when the markets are actually lower, it is the consumption-based stocks and sectors that are in the focus, and FMCG is leading the gains as of today. Now, for all our viewers to also understand why are we starting the series with FMCG, remember, in a gesture loaded with symbolism, the first thing that Prime Minister Narendra Modi did after taking his oath as the Prime Minister was to release the 17th installment under the Pradhan Mantri Kisan Samman Nidhi scheme. Under the PM Kisan, farmers are to get 3 equal installments of 2,000 rupees every 4 months right into their bank accounts. Now, to help us really understand, is this a space and a sector that you need to focus on and ardently look at some of the stocks to add to your portfolio right ahead of the budget? I am now joined by a very special guest joining right in on this show with us. Mr. Ambareesh Baliga, a well-known market expert, is now with us. Warm welcome to you, sir. And thank you so much for taking the time out. And what better way to start off this series than with you, who've been tracking this sector very, very closely for about 35, 40 years or so. So do tell us, sir, what does the FMCG sector really, what importance does this sector really hold for an average investor who's building on their portfolio? Is this like a staple, just like how we talk about staples in FMCG?
Good morning, Sakshi, and thanks for having me. I'm really honored to be in the first show of this series. Now, talking about FMCG's sector, I mean, we have seen a decent move in this sector immediately after the fractured mandate in the last 2 weeks. I mean, basically, it moved because it was assumed that the government will now have to focus on the bottom of the pyramid and the rural segment, which actually means more cash in hand for them. And once they have more cash, they would normally spend on like FMCG consumer goods, and because of which we saw that recent rally.
Yeah.
And if you talk about the prospects for this sector, I mean, if you're talking of the next 5 to 10 years, it's expected that this sector will grow at least about 14-15% CAGR, which is huge because if you see in the last couple of years, we have seen single-digit growth, which means that the next few years we'll really see a decent double-digit growth going ahead, which again means extremely good growth for this stocks concern, which again have underperformed in the last 2 to 3 years. So I think from a contrarian point of view, FMCG sector really makes a lot of sense now.
Okay, wonderful. FMCG makes a lot of sense, and over the next 5-10 years, if you're thinking long-term viewers, this could definitely give you double-digit returns and a CAGR growth of about 15% as per expectations that Mr. Baliga is sharing with us. Now, with respect to the upcoming budget itself, do you think FMCG is ripe to be in a sweet spot in this upcoming budget? Will there be a lot of focus, like you also pointed out, on the rural space and on the rural spending, and will that in turn really aid all the moves that could come in on the FMCG? Why I'm asking is this because you also pointed out this is a very laggard sector up until now. Markets have had a dream run and various sectors have doubled, tripled in this recent run up as well. But it's the FMCG that just failed to move the needle. So, with the hopes high on the upcoming budget, is there going to be a lot of focus from the government too?
From a budget point of view, typically there is nothing directly for the FMCG sector. I mean, you really can't have the GST rates announced because we had the new GST announced just about 2 days back.
Sure.
Possibly PLI scheme, but again, PLI scheme need not really wait for the budget; it can be announced anytime. But then, what people normally look at are the other sort of triggers. I mean, for example, like we look at the government focus on job creation and improving rural income. So, if there is anything positive to that effect, automatically there is a trickle-down effect on the FMCG sector. Like I just said, I mean, if there's more cash in hand, normally it is spent on FMCG. The other pointer to be looked at is inflation again. I mean, for that, you look more at the RBI report and the meet than budget. But then, I mean, overall, we get to understand as to what sort of a figure of inflation we're looking at. So if inflation is under control, I mean, that is another trigger for the FMCG sector. And I think one of the major, I mean, positives for the Indian FMCG sector is the demography of India. I mean, we have so many young people, and they are the consuming class. And at least over the next 2 decades, we'll see that I mean, the younger generation is growing, so automatically that will translate into more demand for FMCG. So overall, I think one needs to look at the sort of government focus on rural.
Okay, let's come to specific stocks and how does one really approach? Should one go with the leaders of the pack? They've not done anything for the last 4 years, like HUL, for instance, has practically not moved in the last 4 years. For all of those, holding this stock have just seen a lot of disappointment. ITC, of course, has had a dream run, but that was with for other reasons that came in apart from FMCG as well. And now there are hopes building on the demerger of the hotels business as well. How about Nestle, which has recently seen, a stock split for the very first time, but again, controversies continue to roil in. There are second-rung ones, Dabur, Imami. How are you looking at this entire pack of staple FMCG leaders? Are they good enough to be really looked at right ahead of the budget to be added to the portfolios and also looking at the valuations?
Absolutely, because see, whenever when a sector is an underdog or an underperformer, and then starts to perform, you normally have the large caps moving first and then the mid caps. But then the sort of names which we are discussing right now, I mean, most of them are large caps as well as the I mean the higher mid caps. For example, HUL. I mean, this I mean, stock hasn't really done anything in the last 2 to 3 years. But then again, they have one of the largest sort of share in the FMCG space. So if the FMCG space starts doing better, HUL surely will benefit. So HUL, despite the sort of a move which we have seen in the last, I mean, couple of weeks, is still a good buy. I mean, you should be looking at stocks like Dabur, Brokerage Consumer, ITC. I think the demerger, I mean, will not really move the needle too much because it's just about 10% of the overall portfolio, and that too is sales, and hotels anyway is doing well. But ITC's FMCG, I mean, portfolio should do extremely well going ahead. Then we have like a stock like Jyoti Labs. I think this sector, I mean, like this stock has done decently well in the last couple of months, but still there's a lot of, I mean, move still, I mean, expected in this stock. I mean, I'll not be surprised if we see another 30 to 40% sort of a move in Jyoti Labs from here. Imami is the other, I mean, stock one should be looking at. So I think overall, I mean, this sector is underinvested, so it is time to buy into this sector, possibly have a weightage of at least about 10 to 12% of your portfolio in HFCG.
Right. But sir, what about valuations? There are contrasting views. Some say that despite the underperformance, valuations have priced in most of the moves in the recent run up in some of these companies. What is your own take of the valuations in this sector and particular stocks that you've also highlighted?
No, because see, if you talk about valuations, valuations have been decently high in the FMCG space. I mean, historically, if you look at it, it's been high, basically because of the sort of brand value each of them carry. And if you see the last few years, they've been growing at single digits. But now, when you start seeing I mean, these companies growing at double digits, going ahead over possibly the next 2 or 3 quarters, and I'm quite sure that the sort of valuation we're talking of will get revised upwards. And I mean, even as of now, we have not seen much of a price increase as such. It's more of like volume increase which we have seen. I think over the next possibly 2 to 3 quarters, we could also see some uptick in the price realizations. And that I think should be positive as far as the margins are concerned for these companies. So overall, I see a valuation upgrade going ahead.
Okay, and like you pointed out, sir, on the earnings perspective, we are going to be seeing earnings about 10-15 days from now. Where are you pinning your high hopes on within this entire consumption space? May not be just these 4-5 companies that we've discussed, maybe even beyond that, consumer discretionary included, the rural focus themes included. Where exactly do you believe is the outperformance likely to stem in within the consumption space, sir?
No, like I said, I mean, when a sector starts doing better, it is the large caps which would be in focus. So I would surely look at stocks like HUL or a Dabur, and also an ITC to start off with.
Okay, understood. What else do you think is a big tailwind that one should be really looking forward to going forward from here? Is the hope building on the rate cuts now going forward from here? Is that going to add on to the move over here? Is it going to be some other tailwind that one should watch out for as a key trigger for this sector to now start performing?
I think, a couple of tailwinds are there. I mean, in the last few years, we have seen the raw material prices going up. I mean, that has more or less stabilized. We have seen some correction in the raw material prices. So, if you're talking of some price increase and a sort of a reduction in raw material prices, we really see the margins moving up. We've had some other inputs, for example, the packaging material, where the GST has come down. I think that is positive for the FMCG space. Detergents, GST has been reduced, so I think that will help increase consumption. So we'll see volume increase out there. And more importantly, I think monsoons. I mean, we've had a slightly slow start, but then over the next 2 months, once we see that the monsoons are normal, and along with the budget focus on rural India, I think all these would be the triggers for FMCGs. I think there are enough triggers, going ahead. So this is the time to pack up on the FMCG space.
This is the time to really pack up on the FMCG space. That couldn't be a clearer verdict right there coming in. And of course, the underdogs, the underperformers are now going to be getting into the limelight as well, and with the upcoming budget too. Now, one trigger you did talk about, that there could be perhaps, more money in the hands of people, and that would lead into some flowing into this FMCG space as well. And a lot of young people, like you highlighted, are betting big on consumption. But when we look at the statistic that Indian economy has grown at a world beating what we're expecting 8.2% in FY24, but consumption has really grown at a half the pace right now. How do you see over the next 5-10 years the entire consumption theme to really play out, so versus the economy?
Well, like I said, we should at least see a sort of a 14-15% sort of a CAGR for the FMCG space, which is actually nearly double the GDP growth. This is basically because of the sort of employment generation which will happen in the next couple of years. And all those people in the age group of 12 to possibly 18 would in fact become the largest consumers over the next 10 years, since they will start earning. I think that's going to be the big trigger going ahead. And one more thing which I didn't mention was we are talking of exports as far as all the other manufacturing
Yes.
sectors are concerned. But FMCG exports is something which I think the government will start focusing on, because this is one space where most of the inputs are, like domestic, whereas exports would be 100% sort of a income generator for us.
Okay, so you did talk about your three top favorites within the FMCG pack, HUL, Dabur and ITC, that you would go with. Beyond this, when we include the other larger sphere, including say a liquor stocks, sugar stocks for example, the other consumer discretionaries, what else would be on your top radar now?
I would also be looking at the sugar stocks, not purely from a sugar perspective, but from an ethanol perspective, because that's going to be a big money spinner for most of the sugar companies. So there, in fact, my top pick would be Balrampur Chini. In the liquor space, again, it's going to be United Spirits, the leader in that space. So these are a couple of those stocks which I will be looking at.
Okay, got that. Would you also include something like an FMEG within the entire space when we talk about affordable housing theme that the government has? Again, that is a rural focus. Now, that is not directly FMCG, but the FMEG, which will get higher demand with of these. Yeah.
See, when you're talking of the overall consumer space, then you can talk about affordable housing, which again, I see visibility at least for the next 5 to 7 years, the sort of a growth which can happen out here. And out there, among the leaders, one should be looking at a stock like Brokerage Properties or a Shobha. Among the smaller ones, one can look at a stock like Arihant Superstructures, which is focused on Navi Mumbai, has about nearly 10-12,000 crores of projects on hand. One can also go beyond that and look at fast-moving electrical goods. I mean, you have a Havels out there. Then in the white goods, which again is doing decently well right now. I mean, something like a Voltas, which has already moved up. But then I think one can wait a while and pick it up at slightly lower levels, because if you're talking of the next 2 to 3 years, I see Voltas doing extremely well.
Okay, wonderful. Well, on that note, thank you so much, Ambareesh, for being with us on this show and discussing all these wonderful insights as to what could be big tailwinds coming in for the FMCG sector, what are the big hopes from the budget for this sector as well, and which are the top stocks that you've highlighted for all our viewers. Truly always a pleasure to host you on Business Today Television. Hope you have a great time till we meet next on air. Thank you so much. And viewers, what we'll do now is also we'll have our colleague Pawan Nahar now join in. Now, Pawan has done a very interesting story with respect to the FMCG sector and with the hopes building on from the upcoming budget as well. He's also quoted a lot of brokerage houses which are now penciling in higher hopes on the budget and are now taking out their top picks from this space. Pawan, over to you. What are top brokerage houses saying? Which are the key FMCG stocks that investors should now keep an eye out on?
So, Sakshi, good morning. So, ahead of the union budget and the monsoon season, so three top stocks, including Nestle, HUL, and ITC, should be on the radar of the investors. So, the analysts say that interest of investors should now move to the defensive plays and the FMCG counters instead of high beta, PSU stocks. So, they say that the market participants will be keenly watching the government's push on the rural consumption and the distress in the upcoming monsoon after the election results and ahead of the union budget, full-time budget after the new government is formed. So Sakshi, FMCG, as you all know, that it is the biggest FMCG counter and it has a strong rural, background. And the secret major ITC, it is always on the radar of investors ahead of budgets on the because of the taxation on the tobacco products. And Nestle, which is considered to be a stock for the urban consumption theme from the FMCG space. So these are the three stocks that should be on the radar of investors. And if you see data, then majority of the analysts are positive on all these three stocks. ITC, which has a average target price of around 495, it is recommended by 30 analysts out of 34, and HUL, which has the average target price of 2580. And it is recommended by around 17 analysts. And Nestle, it is also recommended by 17 analysts, and it has a target price of 2655. That's all from my side.
All right, Pawan, thanks a lot for all that update. Well, three key stocks that brokerage houses and analysts are betting big right ahead of the budget from the FMCG sector. It is ITC with an average target of 495 that most of the analysts, in fact 30 analysts, are betting big on. HUL with an average target price of 2580 and Nestle with an average ticket price of 2655 that most of the analysts are betting big on. These are the three stocks within the sector that analysts believe are likely to benefit from any announcements that could be coming in the upcoming budget that will have rural as the key focus. Could it be via the tax cuts for the middle class? We do not know. Could it be via extra money being pumped into the farmers' hands as well? Could it also be with some subsidies coming in within the agri space? Anything and everything that could come in favor for the rural sector and higher capital allocation within the rural focus schemes or welfare schemes are likely to benefit these three key stocks as well. So there you have it, our first edition covering budget stocks within the FMCG space. You heard from the guests also as to why they believe FMCG sector is ripe to take a flight right ahead of the budget and even beyond, because this is one sector which has been an underperformer. Valuations are ripe, but even then there could be a 15% CAGR growth over the next 5 to 10 odd years within this sector. So this could be the best time for you to really look at FMCG stocks. But I'd like to highlight for all our viewers that you need to speak to your own experts, financial experts, before you dive in onto any of the stocks that have been discussed by our experts and our colleagues on this special edition. Until then, many thanks for tuning in, but do stay tuned. Business Today Television has an action-packed day right ahead for you. 12 noon, I'll be coming back with daily calls which will address all your stock related queries, and 12:30 p.m. we will also have Market Master, the top market voices addressing all the concerns, all the doubts around markets and how the markets are likely to perform right ahead of the budget. So stay tuned, upcoming a lot of action on your screens.
You've had an important meeting with the finance minister today. What are the kind of suggestions that you have put forth and how do you see government taking them?
देखिए हमने उनको सजेशन दिया है एज अ PhD चैम्बर ऑफ कॉमर्स